It's that special time of year when you take stock of your job, your living sitch, major purchases, and even your relationship. And then turn it all into math. Love doing your taxes just as much as we do?
Help me, I'm poor.
We've tapped the pros on how you can avoid mistakes and rule tax season. Choosing the wrong tax pro. If you're hiring someone, make sure they know what they're doing.
Okay, let me explain. This is your tax return.
Okay.
Randall Brody, an enrolled agent and owner and founder of Tax Samaritan, says choosing an underqualified tax preparer or one that is more focused on providing you with the highest refund without consideration of filing an accurate return could easily put you in hot water. Not staying on top of it. If you're self-employed, it's especially important to stay on top of your taxes throughout the year. But even if your taxes are automatically deducted from your paycheck, it's your job to make sure your employer is withholding the right amount. Jeffrey A. Schneider, an enrolled agent and certified tax resolution specialist, says the most common mistake is not withholding enough from paychecks or not making estimated tax payments. The taxpayer can be subject to the underestimation penalty. This is based on what should have been paid with each estimate and was not. Pay those quarterly taxes and you'll skip the late fees. Lowballing yourself. In order to make the most of your charitable deductions, keep your receipts and take pictures.
Here, my friend, take it.
Schneider says you need to have the receipt from the organization and you should also have a list of everything you donated. Melinda Kibler, client service and portfolio manager with Palisades Hudson Financial Group, says whether you dropped off a bag of clothing at a local charity or donated $5 at the cash register of your grocery store, you should be tracking all of these contributions. And her pro tip? Using the standard mileage rate of 14 cents per mile for the drive you made to make your donation, plus parking fees and tolls. Ka-ching! Not itemizing. Instead of taking the standard deduction, save your receipts and itemize. Jacob Dayan, CEO and co-founder of Community Tax, says, for some taxpayers, a significant amount can be saved each year by itemizing deductions. This includes homeowners, those with large charitable contributions, and people with large medical expenses. If you own a home, fill out a Schedule A to see if your itemized deductions could be larger than the standard. Not saving. Just crossing your fingers that you'll have enough money to pay for your taxes?
According to science, most professional women don't have time for any of that.
Dayan advises making a plan, saying, one fantastic way to prepare for tax season is by putting aside money every year for your taxes. Even though most companies will already take taxes out of a paycheck, sometimes taxpayers owe much more than the company deducts. Well, back to putting money into our piggy banks. Forgetting job search costs. On the job hunt, Kibler reveals you might be able to bank on deductions related to your work search. She says, in order to deduct job hunting costs, it must be a job search in your current line of work. Deductible expenses include costs of a job placement agency, resume costs from preparing and mailing it, as well as travel expenses. Not claiming extra income. Got a side hustle? Don't forget to account for that bonus income. Dayan says many forget that this income is taxable. Especially if you have a full-time job and a side gig, be sure to save money for the taxes on that extra income. Not paying this supplemental income tax can come back to haunt you in the future. You are now ready to totally own your taxes.
We are keeping it tight. It is tight.
Thanks for watching. Click the list icon to subscribe to our YouTube channel. Plus, check out this other cool stuff we know you'll love too.